Dr. Reddy's numbers. We've been on standby for it. Profit after tax at 302 crore rupees and the top line coming in at 3,250 crore rupees. A thumbs up from the stock markets, at least as the first cut numbers go. The stock trading at the day's high is currently up by about 3% in trade. Those are the only flashes I have with me at the moment. Consolidated profit at 302 crores. We were expecting it to come in at 373 crore rupees. So that's a shortfall of about 70 crores from what our expectations were. Revenues, according to agencies, at 3,530 crore rupees. I'm sure Pankaj Podar will be miking up to tell us a little more and to analyze the numbers that have been announced by Dr. Reddy's, the margins, as well as the exports. Okay, Pankaj, yet to mic up with us. Karina, do you have the detailed press release on Dr. Reddy's yet?
Press release is yet to come, but like you just flagged off, bottom and top line is what we have. Bottom line is actually in line with the what is a tad below 302 crore, is a bit below than what we had estimated. 373 was what the ET Now poll was suggesting. Revenue has come in at 3,530. This is of course what we are picking up from agencies versus our poll of 3,700 odd crore rupees. So going by what the agencies are flashing at this point of time, we are the numbers have been a tad below on bottom line as well as top line. What one needs to watch out for is how the US business has performed, because one is likely to witness the US business coming in a tad lower this time around, and even the US sales could decline about 8% as per the poll. European sales, those have also as per analyst reports have not done very well in the quarter gone by, so that is as well important to find out, along with of course how the India business performance has done. We have Ranveer Singh from Systematics joining us now on the show. Hi Ranveer, thanks much. We have a couple of frontline numbers at this point of time. The consolidated PAT has come in at 302 crore rupees and the sales have come in at 3,534 rupees. EBITDA at 577. So as per our estimates, it's been a miss on all fronts. A tad bit of a miss on the PAT, but yes, the rest of the parameters have been a miss. How are you reading into these numbers? Is this what you had expected?
Yes, so no, this is the number is surely below our expectation. So our estimate, revenue estimate was around 4,000 crores. That is definitely below what has come. Even at you see at net profit level also we estimated some 390 crore. So 302 crore is that below. What I believe that most of top generic players have been showing a similar pattern, that a negative growth rate in US, but a little bit positive in ROW and European market, and India also being a moderate. So I think this is what pattern we expect. We are awaiting a detailed number, but yes, the result is of course weaker than our expectation.
Okay, the US revenues at 1,448 crore rupees, down 10% quarter on quarter. The EBITDA has also, come down. Let me go across to Bhavesh Gandhi of IIFL. Bhavesh, now we're seeing the stock react to the details, the numbers that are coming out, whether it's the US revenues or the EBITDA. What do you make of it? What's your first cut analysis?
I think more than a revenue, for me, the bigger miss has been on the EBITDA front. We had estimated close to about 750 crores of EBITDA for the quarter. And clearly the EBITDA number is about 200 crores below our expectation. And some of it we'll have to see, but the cost later on, and obviously revenue miss is also there. So all the numbers are way below our expectations, especially on the EBITDA and the PAT front.
Why do you think that is the case? I think if there have been any regulatory hurdles or all of that is well known by the market. So do you think this is maybe some one-time itemization which we don't know about? Could it be that? Some entry that we don't know about?
We'll need to see that actually, because in pharma companies we have seen a lot of the forex angle comes in, the R&D angle comes in. What is the R&D spend that goes up and down every quarter? So we'll need to see that those factors as well in detail.
Pankaj is also now joining us. Pankaj, how are you reading into the numbers? Because as far as our poll goes, it's a bit of a miss, right?
Absolutely, it's a miss as far as numbers are concerned. But, you have to, for a company like Dr. Reddy's, as even the analyst was pointing out, the US business is important. It was pointing out towards an 8% decline. On a YOY basis, it's down 6%, but you have to look at the QOQ numbers, and that's particularly not looking that good. So one has to be really careful as to, how they go ahead and read into these numbers. Remember, FY18 has been a challenging year. Let's wait for the management commentary. On the face of it, margin is not looking that good. PAT is not looking that good. Overall sales from US markets is not looking that good. So it's not looking a great quarter. Of course, this is a company which gives you a R&D expense only slightly later. So we'll wait and watch if that is the main problem because of which, you are seeing these issues coming in. Right now, the stock is up around 1 or 2 odd percent. I think the markets are waiting for management commentary. It's an absolute flat, year that we've seen, or FY18 has entirely been challenging. If the management gives a good outlook for FY19, I think that will be the first signs if there is any recovery. Otherwise, no upgrades, no downgrades expected. In fact, marginal tweaking towards downside could be expected on the basis of these numbers.
Pankaj, I'm looking at the revenue mix, the segmental one as per the geographies. The North America on a year-on-year has seen a degrowth of 6%, and on a sequential basis, North American market, the revenues have degrown by 10%. Isn't 10% a little more than what the poll had suggested?
So the IMS data in US did about 7%. The street was anticipating close to around 8% number, which was also our poll, and they have delivered a 10% quarter-on-quarter number. However, on a YOY basis, it's very difficult to compare these numbers, Karunya, because you get the rupee impact which comes in. Last year, same time, rupee was not the same, and that's why when you convert those dollar sales into rupee, you don't get that number. Of course, QOQ also, there would be a difference, but still, you just get a sense that, these numbers are not that great, and, you clearly pointed out the right thing. That's the North American revenues, which is down 10% quarter-on-quarter, and that has been a problem. That continues to be the problem. Karunya, if you just have the release with you, can you just tell us that what is the growth in the CIS and the Russian region? Is it greater than 10% plus?
It says emerging markets, which has degrown 7%. Does it fall under the same category?
Sorry, I could not get that. Emerging markets?
Emerging markets on a sequential basis has degrown 7% and 9% year-on-year.
Right, so I think we'll need more details. I would need the details of Russia and CIS. That would come a little later. But overall, the numbers are a miss. Expects downgrades to continue.
Okay, so, but Pankaj, while we also work the phone lines with us, we do have Gurmeet Chadha, the founder and CEO of Complete Circle Consultants with us. Gurmeet, I know you've just entered our studios. You've not had a chance to completely analyze the numbers. It's on your screens. You can see it at the moment. It's coming way below, not way below, it's below expectations. What has caught the street by surprise is the EBITDA figure, which has come in below expectations. A lot of headwinds that are obviously existing. The US business has contracted 10% as well, which is not good news. But I want to get a futuristic thing from you. It's public information on any regulatory problems happen that don't happen, the launches. Look how the rupee is doing. It's the worst performing currency right now in Asia. It should, in the end, in the first quarter, I would imagine, of the new financial year, be good news for Dr. Reddy's, considering where the rupee is.
Yeah, I think in general, it is good news for pharma. I think pharma stocks are priced to perfection, as you rightly said. If you look at Sun, Dr. Reddy, I think what we are missing out here is that they have a lot of, expertise in some of the domestic therapeutic formulations. And while the US business continues to suffer, the margins are, so lot of companies in pharma look attractive. Ipca Labs, although the results are of Dr. Reddy, is another one which is a leader in, anti-malarial therapeutic formulations. It has also got a tender from the global funds, which is the institutional side of generic business. So I think pharma, one has to be selective right now. You'll have to have, companies with formulations getting various approvals to be looked upon.
But Gurmeet, let's talk about the earnings season so far. I think the star performer perhaps has been the consumption story. Look how the stocks have reacted, whether it's in HUL and Nestle, or all of them have done a day after the results, on the day of the result. Jubilant is another one, We are, of course, on standby for counters like SBI, IOC, ONGC, and in fact, the entire oil and gas pack. But for the season so far, what has impressed you? Which are the stocks that perhaps you would recommend as the top picks post the earnings season?
So two broad themes, Nandara. I think one is, the urban discretionary spending is picking up. So if you see the consumption has grown by about 11%. The capex, which is represented by your gross capital fixed formation, is not grown. So discretionary urban spending has picked, rural consumption is picking up. As you rightly pointed out, the numbers in HUL, Imami, some of the other numbers picking up. The other theme which is also looking very, very attractive is retail lending. So if you see our household debt to GDP is one of the lowest, and we are now seeing credit driven consumption tailwind picking up. So I think some of the names like Bajaj Finance, stellar set of numbers, retail banks, so NIMs are better, the credit will grow at 15-16%, and these names can go better than the market, maybe 20-22%. So Bajaj Finance, HDFC, Kotak, some of the good names which are strong retail lenders, I think should do well. So as I said, the focus is now back to business performance. We had 2017, which was price performance, and now your focus is again coming back to business performance.
Yeah, Gurmeet, sorry, I was talking to you. The fact that while there have been a lot of consumer-facing companies which have done very well in the quarter gone by, which are some packs or some themes which have not been able to live up to the expectations, or where you were expecting a sort of a recovery coming in and have not been able to deliver?
Some names, I think the recent one was yesterday, which was Colgate. The volume only grew 4%, and they lost some market share. From a 56% market share, they were down to about 52% market share. But the margins expanded, and that probably was a bit of a breather for the stock. The other places where the numbers probably could have been a little better is, let's say, for example, even Maruti, even the numbers which are coming. I think now probably they are trying to expedite their phase 2 plant and reduce the waiting period for some of the key models. But overall, as I said, we are seeing a good pickup in urban discretionary spending, and rural demand is coming back. So I think the numbers will fall in place. I think as GST settles down, the restocking is complete post GST. There's a movement happening from unorganized to organized. Even look at some of the smaller segments. Karuna, just look at, for example, pressure cookers. We've had a lot of unorganized players who used to eat away a lot of market share. Now suddenly you will see, because of the GST, the price difference has reduced. So I think a lot of smaller segments within consumption also should pick up and both report numbers in volumes as well as margins.
Gurmeet, we'll leave it at that. It's always great chatting with you and getting in some perspective on how the markets are doing, how the earnings have played out, and which are the themes to look at this point of time.